Good afternoon. Welcome back to Venture Daily, the fastest way to catch up on everything that matters in tech, startups, and venture capital.
Founders, funders, and fans of the future, this is your jolt of insight news you can actually use and guests who know their stuff. I'm Josiah Simons.
I'm Jackson Fordyce, and on today's show, Elon Musk's xAI is seeking a $113 billion valuation as he doubles down on AI dominance after stepping away from the White House.
Chime is going public at less than half its peak valuation, but with serious growth claims.
And Mary Meeker, the queen of the internet, warns AI players like OpenAI are racing toward commoditization amid cheaper global rivals. It's Tuesday, June 3rd. Let's get you smarter today. A smuggled smartphone out of North Korea is giving the world a rare look at just how far the government goes to monitor its people. From the outside, it looks like a regular Huawei-style device, but under the hood, censorship mechanisms deeply embedded in its software.
It censors your language as you type. For example, if a user typed Oppa, a South Korean term for an older brother or a boyfriend, the phone would automatically change it to comrade, followed by a warning that Oppa could only be used for a biological sibling.
Try typing South Korea, it gets replaced with puppet state in real time.
But the scariest part, it takes silent screenshots every 5 minutes, saving them in a folder users cannot access. Authorities can later comb through these shots to see what you were doing. Apps, texts, searches, everything.
All of this is part of North Korea's broader war on outside influence, especially South Korean media. There are even youth crackdown squads that stop teens on the street and check their phones for banned words.
And yet, despite the efforts, outsiders are still smuggling USBs with South Korean dramas, because for many defectors, they claim K-dramas and foreign radio played a large role in their decision to flee.
And this isn't just about censorship, it's about turning everyday tech into a tool of obedience, a stark warning of what happens when innovation serves power, not people.
All right, before we jump in, I want to tell you a little bit about Public. If you take investing seriously, you need to know about public.com. That's where you can invest in everything: stocks, bonds, options, crypto. You can even earn some of the highest yields in the industry, like the 7% or higher yield you can lock in with a bond account. Public is a FINRA-registered SIPC insured platform that takes your investments as seriously as you do. Fund your account in 5 minutes or less at public.com/venture. That's our link, and get up to $10,000 when you transfer your old portfolio. Paid for by Public Investing. Full disclosures in podcast description. Please click the link in description below, public.com/venture. Tell the people down at Public who sent you. That's us. It really helps support the show.
All right. Yeah, first major story today. Elon Musk is making a major comeback in AI. His startup xAI just launched a $300 million secondary share sale, valuing the combined xAI and X Group at a staggering $113 billion. The secondary offering lets employees sell shares to new investors and signals that Musk is doubling down on merging AI with social media on a massive scale.
This follows Musk's $44 billion takeover of Twitter in 2022, now rebranded as X, and a March deal this year that valued xAI at $80 billion and X at $33 billion. After stepping away from his White House role last week, Musk is refocusing full throttle on his companies: Tesla, SpaceX, X, and now xAI, with critical new technologies rolling out soon, according to the world's richest man.
His vision is to combine AI models, massive computing power, and X's vast data and user base to directly challenge OpenAI and other big tech players. xAI has already unveiled its Grok chatbot and built Colossus, one of the largest AI supercomputers in the United States, which powers their development efforts.
But Musk isn't just competing, he's also partnering strategically. Microsoft is integrating xAI's models into its cloud services, and Telegram is distributing Grok to its billion-plus users. This blend of AI, social media, and cloud infrastructure could reshape how we interact with technology, all part of Musk's larger vision for his everything app.
Still, there's a big question hanging over the whole effort. Can Musk's hybrid approach truly disrupt the AI market and take on established players like OpenAI? His success or failure could set the tone for where the AI race heads next.
And Jackson, before we move on to our next segment, I think there was one company Musk leads as CEO I forgot to mention.
Which one?
Well, there's xAI,
Yep.
SpaceX, Tesla, and Neuralink.
Oh, yeah, the company that just closed a $650 million funding round.
That's right. That's the one. Anyone that tells you that Elon Musk is washed, whether you like it or not, the guy stays winning.
Yeah, and the company has made some substantial breakthroughs in recent months. Neuralink has now implanted brain chips in 5 people with severe paralysis as part of an ongoing human trials. In May, the company earned breakthrough device designation from the FDA, a status designed to accelerate the development and review of cutting-edge medical technologies.
Neuralink's $650 million Series E round included investors such as ARK Invest, Founders Fund, Sequoia Capital, and Thrive Capital, among others, some big names.
Yep. All right, Chime is finally going public. The fintech darling just kicked off its IPO roadshow, targeting a valuation of up to $11 billion.
That's less than half of its peak $25 billion valuation from 2021. But Chime's betting that its mobile-first banking model and 8.6 million users are still a hit on Wall Street. In its S1, Chime founders framed the IPO as a long-term play, emphasizing that, quote, with less than 5% adoption in our core target market, we see an enormous opportunity to grow for years to come.
Founders Chris Britt and Ryan King will retain a combined 75% of the voting power, which could spook some public investors, but they're pitching a massive growth opportunity and say strong unit economics will fuel it.
And importantly, this makes Chime the first of the big fintech players to actually IPO. That first mover status could give them the spotlight or expose them to all the heat.
And for more on the story, I called Jason Shuman.
Jason Shuman, general partner at Primary, largest seed-focused firm in New York City.
I started by asking Jason, why did Chime's valuation drop from $25 billion to $11 billion?
It's a good question. At the end of the day, public market multiples change all the time, and so does the underlying performance of companies as well. And so when you think about it, they could have raised the last financing round in a world in which they were being valued off of, call it 10x next 12 months revenue. Now, based on the reports right now in the public markets, it looks like they'll be trading probably somewhere in like the 5x, 5.5x next 12 months revenue. And that could just be a combination of those two factors that I mentioned.
Chime's founders are set to retain a staggering 75% of voting power post-IPO, a level of control that's rare even in tech. And so I asked Jason, will Chime's founders holding 75% of voting power scare off public investors?
I haven't gone deep into the weeds around like the actual voting structure, because oftentimes founders can have a different voting structure out of the gates, and then that can go away over time as they start to sell their shares. So as long as it's not something that is, very off market, I think it will be fine. If it is incredibly off market and you are a company that the public markets don't fully understand and fully get, then you might be a little more challenged.
Josiah, Chime has a low market penetration of only 5%, which raises a key debate. Is this a huge growth opportunity or a red flag? And so I asked Jason, with only 5% market penetration, is Chime's growth story still believable?
Absolutely. I mean, when you think about it, their target market is folks with under $100,000 in their bank account. That is the average person in the United States. That's far more than the majority of people in the United States. And I think I can probably speak for everyone that most banking experiences are not magical. They're not easy. You have to go into a branch to do certain things. You have to talk to people on the phone to do certain things. The dashboards are broken all the time. I mean, even JP Morgan's, right? So I do think that they have a long way to go in terms of more customers that they can acquire, and their unit economics are really strong. And so they can continue to reinvest in growth and roll out new products that continue to scale.
In May, we saw fintech startup eToro IPO. But before then, the last significant U.S. fintech IPO was SoFi, which went public via a SPAC merger in June of 2021. With big players like Stripe and Klarna still sitting on the sidelines, I asked Jason, is Chime's first out-of-the-gate IPO a strategic advantage over other fintech startups?
Historically, consumer companies are the first to go out after market downturns. And the reason why is they're just easier for the market to absorb. They're sexier names, easier for retail investors to get involved. I mean, you look back a couple of years ago, and when Kava went public, they were one of the first ones after the market was quite tight. So I do think for them, it's an advantage to be going out because they are one of the first consumer names to be going out. And it's probably going to be helpful for the B2B companies to come after them. But I would say, I wouldn't anticipate Stripe going public anytime soon.
Tell us your secrets, Jason. He seems to have some insight on Stripe not IPOing anytime soon.
Yeah, well, maybe we'll have to call him back on if the Stripe IPO ever comes across our desks here at Venture Daily, hopefully in the near future. But thank you to Jason Shuman for joining the show today. All right, last story. Mary Meeker, legendary investor who earned the title the Queen of the Internet, just issued a serious warning to OpenAI and the rest of the American AI giants. Her new report says the large language model Gold Rush might be headed for a reality check.
According to Meeker, general purpose models like GPT and Gemini are starting to look a lot like commodities. Costs are rising fast, competition is exploding, and new challengers like China's DeepSeek are building cheaper, more efficient models that could eat away at OpenAI's lead.
She's not saying the opportunity's gone. Far from it. Meeker still believes it's a $10 trillion market, the kind of generational wealth creation we've never seen before. But her point is, that prize won't go to just one or two American companies.
Right, this isn't a winner-take-all scenario. She thinks the field will fragment with different companies owning different use cases, different customers, different parts of the stack. And the ones that survive, they'll be the ones with deep pockets, real distribution, and a clear product edge.
So if OpenAI wants to stay on top, it's not just enough to be the smartest model. It needs to become an indispensable product. For some insight on the story, I talked to Eleonore Crespo.
Yes, I'm Eleonore Crespo, CEO and co-founder of Pigment.
I started by asking Eleonore, do you agree with Mary Meeker that large language models are becoming commoditized? And if so, what does that mean for OpenAI's future?
So I think, first of all, we see that all large language models are trying to find their own path. I saw today Perplexity announcing they are going enterprise. I know Anthropic is also going in that direction. They are all starting to specialize into their own category. Anthropic has been, making some deep dive into coding. So I think it's really right now the time for them to understand where is their own destiny. So while there is a part that is going to be commoditized, I do believe they're all going to find their strengths into the core of what they are doing and the customers they are going to serve.
With rivals like DeepSeek gaining ground fast and at lower costs, the global AI race is heating up. So I asked Eleonore, how should American AI leaders like OpenAI respond to the rise of cheaper and increasingly competitive models from companies like China's DeepSeek?
That's a very good question. I do think that while there is much more competition happening every day, OpenAI has an edge. First of all, they started to already win the customer base. They have more users than anyone on the market that keeps growing. And they are not only captivating the user base, but they are also showing innovation that goes beyond just the LLM. And I think they are starting to really put in the market things that are going to be very relevant for specific use cases. So again, going back to commodity or not, what we start seeing, and we saw it today, a note leaked around the super assistant, and the employees are also launching, the AI employees are launching, they are going to start putting in the market things that are much more packaged to serve the end customer.
So OpenAI's advantage isn't just tech, it's distribution, user trust, and real product.
Exactly. DeepSeek can be cheaper, but OpenAI is already shaping the larger ecosystem.
Cost does matter, however, so I asked Eleonore, with the cost to train advanced models skyrocketing, is the general purpose LLM business model actually sustainable, or is Meeker right that it's a venture scale burn?
So I would say, first of all, we've seen the cost of all of these models decreasing by so much in the past year. So I would not worry too much about that because we are just at the beginning of innovation there. That's the story of life, right? Like things keep changing. We've seen that already in the past 18 months to 2 years. And so I would not put that as a big issue as of today.
If Eleanor's not worried, I'm not worried about it either. That's good enough for me. And for my last question, I asked her, is the race for dominance in generative AI more like Uber and Amazon, where early losses are strategic, or are we in a bubble that could suddenly pop?
I think that's a very good question. And I do believe that we've seen that for every single revolution. You take the internet revolution, there were some winners, there were some losers. Some, of the best search engine at the time are nowhere today. And that's going to happen again this time. But what is interesting is that there is so much love, there is so much money, there is so much power and human that are going behind the revolution that I don't think it's a bubble. I do think we are living a revolution, as Mary Meeker was actually saying, that is bigger than any revolution we've lived up until now. And this is what makes it so exciting. So I would say probably there is a bubble in the sense that a lot of companies will die for sure, but the winners are going to transform the world we live in today.
Thank you to Eleonore Crespo for joining the show today.
That's it for Venture Daily. Thanks so much for joining us. We hope we helped you get a little bit smarter today.
And thank you to Content Stack for letting us use your space to film the show. Thank you for letting us be here in Austin, Texas at the Content Stack Experience Center. If you like today's show, whether you're on YouTube, Spotify, Apple Podcast, or X, leave us a like, a comment, and a review. Throw us a 5-star rating if you think we earned it. And as always, we'll see you tomorrow morning at Venture Daily.